Good evening, this is Jukka again, and I'm going to revisit this Arcelormittal trade idea to the upside that I recorded a video about yesterday. If you did not watch that yet, it may make sense to watch that first, or at least after this one, because it kind of has the a little bit of reasoning on the fundamental analysis side, as well as from the side of the price of iron ore and steel for this trade, and some technical analysis charting as well. Just basically showing here that what happened today is the price indeed. What did it do? Well, it kind of went to touch again the yellow line, so 34 period exponential, and bounced higher. These kind of traffic lights things, most of them are green. The volume weighted average price, they're still kind of the wrong way around, so the monthly is higher than the weekly, which is higher than the daily. That would ideally be the other way around. That would kind of show that the monthly average is lower than the weekly, and the daily is highest of them all, which is true when the price is heading clearly higher. Now that's not the case, because the drop from here to here was quite violent. Anyway, I opened another trade on this one today because I'm kind of imagining that there could be a bounce coming on the markets. If this chart is fast, I could show what S&P 500 was doing. If we don't see the chart, we see that it went like 1% higher. S&P 500 has been testing the yellow line, and now again it's above the yellow line here. That's a bullish signal. For Nasdaq, we got a 2% gain. Now that price is still looking for those ones. All right, this, you see that this looks way uglier than the S&P 500 here. I'm going to make that disappear. And here, by the way, we have two red lights, which is less good. But here the Nasdaq also just very barely closed above the 34 period exponential here. The 8 period exponential is still below, so I'm not going to take any bullish shots on QQQ. Actually, the reversal point was more like here when the stochastic crossed up, but I didn't take that because there are just so many more beautiful charts to trade than this Nasdaq. I don't feel any kind of obligation to trade that sort of like less clear charts when I have also clear charts to trade, like this Arcelormittal that we already saw once, but I'll put it back so that you can kind of see how this looks much nicer than Nasdaq. Now, the trade that I did today is kind of here. That's called selling a vertical put. So I sold the 32 put and bought 29 put, both in June 18th expiration. That one is for protection. So here I'm receiving something like 230 for selling this. Well, now if let's say Arcelormittal closes at 31 on June, it means that I need to buy 100 shares per option that I sold of Arcelormittal stock, which basically means that I need to, since my position size is 2 on this account, I would need to put down $6,200 for that, which is okay, but I'm not sure if I want to do that, and therefore I sold a put at 29 for protection. So this makes the trade's risk defined. Currently it's 139 max loss against max profit of 161, which is quite good. Theta is positive, so for each day that we hold the trade we get paid, and the probability to make 50% profit is 60%, which is quite good, and the probability of making a profit is 52%. This POP is the probability of profit at expiration. So all in all, these numbers are quite fine. I like the fact that each day that passes I'm kind of getting paid for just keeping the risk on. I'm getting paid more for this than the other trade that I did yesterday. So all in all, from both of these I'm kind of getting a passive cash flow for as long as ArcelorMittal's price doesn't crack down. If it does, then I will of course be taking loss, but just if it gets where it is now, I will be making money every day. And if there's a bounce, like let's say to 33, 34, 35 level, I'll probably get like somewhere just like here back above the blue line. I will probably already get my 50% quite close to that level. May not happen. If the price moves up by $2, let's see, I move this up by $2. Well, more or less, I think I set my exit at 70 cents. So that wouldn't be kind of enough just yet, but 50 cents more. Like here, I would have already been out a long time ago. So somewhere here, like $2 move, $2 higher, and I'm out for 50% profit. And $2 higher from here would be to 33 would be somewhere here. So if for example we go here tomorrow, I'm out with 50% profit already tomorrow, and that's quite nice. And kind of the longer it takes, for as long as the price goes above 32, which is my sole strike, then I will be winning my maximum profit on this guy here. So that level is here. It doesn't need to move a lot higher, just if the trend continues. This is a winner. And like we remember from the video yesterday, there's the technical analysis that supports this. ArcelorMittal's earnings growth is quite strong. Their results are growing, their revenues are growing, all that good stuff. They are a steel producer, and steel prices are currently going higher. So that's makes it quite easy to make more money if what you're selling is becoming more expensive, right? So there are all those things that are telling me that this trend could continue. And well, then again, like previously, the trade is set up so that it doesn't even need to move much at all, and I'm already kind of winning quite okay on this one. So here's pretty much the idea behind this trade. It's super simple, and I kind of like just putting a lot of things in my favor and then setting the options trade so that I lose more than I win. Sorry, I win more than I lose if that happens. And in addition to that, my victory percentage is higher than 50%, and the probability of making 50% profit is higher, like 60% on this one almost. I kind of thought that it would have been closer to 70%. It may have been when I checked this out, but since the markets are closed, the prices are a bit whatever sometimes, and the probabilities, they kind of jump around a bit. But anyway, quite cool statistics, quite cool chart, quite good fundamental story, and quite good price action also on steel. Everything very nicely aligned. If you would like to learn more about this, of course yesterday I made the same kind of thing. I started telling that if you want to learn more about this stuff, you can go to optioninvestors.club, and then I realized that, hey, I didn't even prepare the website, so I'm not gonna pull that up either. I can do this as I'm editing here, so you probably see now a website where you can go when you put this URL, and I have a very cool birthday present that I'm offering to you now. You can get a strategy called the Climbing Valley Strategy for free. So if you think that that would be useful or interesting, or just like if you're curious, have fun and give it a shot. It costs nothing, and the 5 previous years return on that strategy have been 5,400, and I don't remember exactly how many % on the top of that, but quite good return on risk. Anyway, give it a shot, see if you like it. I hope you do. I hope these videos are somehow useful to you. If they are, I don't know, share them, like them, leave some comments and stuff. And if you don't like them, well, I guess you are no longer watching. So anyway, I'm gonna cut this video and have a good night. I'm gonna go to bed.